NSE closing bell. Well, time for the big market voice as we approach the year end and all eyes are set on 2016. What should investors be watching out for? Listen in to this exclusive piece of interview with Madhu Kela, the Chief Investment Strategist of Reliance Capital, in conversation with CNBC TV 18's Udayan Mukherjee.
If you look at what has happened in the markets, the flows have been absolutely negligible if I take a 5-year perspective. So it's a time frame which you can choose to talk about these flows. So on a 5-year basis, Indian investors have actually withdrawn money rather than put in money, while the size of the economy and size of the absolute saving has gone up a lot in last 5 years. Even though midst of whatever corrections which we have talked about in economy and sentiment being bad, but net people have not put money. Now this has to be looked in relative forms, that people traditionally have been putting money into real estate, into gold, and not been putting money in financial saving and equities. Now the important point to note is that in real estate and gold, you have made a lot of money, but it has been very tepid and negative for the last 3-4 years. So I don't know of too many places where real estate prices actually have gone up in last 3-4 years. Gold has obviously been negative return. Now compare that to a 7% return on fixed deposit adjusted for inflation and taxation. You virtually get nothing. So still in an economy size which is $2 trillion and you are still saving 25-30%. So you are still talking of $400-500 billion of saving here. What the money which has come in India is $10 billion in last 12 months, after being very tepid and negative for preceding 4 years. So, can there be if there is a global shock, can the domestic investors slow down or can be a little bit of withdrawal? That is possible. But if you take a real medium to long-term perspective, I cannot emphasize where this saving is going to go, but it has to increase in equity allocations, because people have still made, in the last 25-year period also, people have made 15% post-tax return, which is the best performing asset class. And within that, last 5 years have been very tough for equity from an index perspective. So I would say that, I am not worried what happens to the local money, even if there is a global shock in the next 3-6 months. But I would see that a lot of investors will latch on, because on a medium-term perspective, on a long-term perspective, India's story, to my mind, is only getting better.
Okay, let me ask you about global investors, since you also interact with them. That one disappointment of 2015 is that all emerging markets, including India, have seen outflows from foreign institutional investors.
That's right.
Do you see that trend accelerating in 2016? I mean, it's one thing to say India is better than other emerging markets, but we've seen outflows as well from debt and equity like other emerging markets. Do you see that trend continuing?
That is entirely possible, Udayan. And I think what is impacting flows especially, because we got a lot of flows from this for sovereign funds globally, and that was essentially the oil money. And if oil prices remain here, we saw Saudi Arabia announce the highest ever deficit of their life. In that situation, we can't be expecting the sovereign funds to increase allocation to any market, including India. So if the oil prices and the commodity prices remain where they are, it is entirely possible that we may see continuation of this outflow from the FI perspective. So that is entirely possible.
Okay, let me try and tempt you into timing the kind of issues that you've raised. What is your best guess about when this global turbulence could possibly hit us? If you had to guess, would you say that whatever had to happen or has to happen in the global space will play out in the next 6 months, the first half of 2016? If we have to form a fresh bottom or go and retest the low that we made in 2015, do you think these are first half events in 2016?
See, the China event I'm not trying to evade the question, Udayan, but I think the whole world is trying to, guess only that. So my guess is as good as many people's guess in that perspective. But the China event, to my mind, is underappreciated by the markets. And I don't know whether it plays out in the first half or whether it plays out in the second half. But in 2016, if we have to watch for one biggest event, it is the China event. And I would be watching it very, very carefully. And we saw what happened in smaller countries like Greece and Portugal last year play havoc in the markets, and volatility definitely had increased a lot at that time. If something, even a mild hard landing were to happen in China, I would think it will be a major event to watch in 2016.
Having said that, if you were to come to pass, do you think we still have a low in place around that 7,500 Nifty where we have bounced off a couple of times? Or is your expectation that in 2016 we might make a lower low?
I am just saying, Udayan, the point is that, if supposing, this question is from a perspective of local investor. I am saying if we are to make, let's say, 7,500 or even go 100, 200 points lower than that, now India is a well-discovered story. Everyone knows that we are going to go to 4 trillion and 5 trillion and $6 trillion of economy. These are sectors. India is well poised, well positioned. Now, the point which I'm trying to make is correction is your only hope to enter these markets. If markets were to correct 7,500 or even below that, I will thumb the table and say buy India, buy equities.
Okay, thumb the table and buy India if the market corrects to 7,500. That's the word coming in. You can watch that entire conversation exclusively only on CNBC TV 18 all of next week.